Hi, I'm Andre Knight, founder of fxKnight.com. What will the markets have in store for us this week? Let's look at the charts and find out. Well, today we got the notes from the most recent FOMC meeting on March 13th, and it was revealed that the Fed's not planning to do any more fiscal stimulus unless we see the economy seriously falter or unless the inflation rate falls well below 2%. The most affected were the Asian markets. We saw last night that the Nikkei dropped by more than it has in the past 7 years in one single trading session. And remarkably, the dollar-yen wasn't as affected. Let's take a look at both. If we look at the Nikkei, for example, we can see a significant reaction to when the news came out. And if I apply a fib, we can actually explain much of the price movement. You can see our retracement went to 61.8%. Our first target for the down move would therefore be 161.8. From there, you can see each time we broke a level, we came back up to test it from underneath as resistance. These are what we call the Fibonacci bonus rounds. So bonus round number 1 went from 161 to 200. And here again, you see that we broke it. We came back up to test it from underneath as resistance. And then and only then we continued further down to the 261 fib, which is at 97.88. And if I was to make a guess as what's happening next, I would say price is going to come back up here and now test 97.88 as resistance. Depending on whether this level proves to be our floor or our ceiling, we'll know the next direction for the Nikkei. Now turning our attention to the yen, we have a pre-existing fib here. And if I just scroll backwards, you can see I drew this fib measuring the extent of the market's reaction to the Bank of Japan's intervention, which took place on October 31st of last year. This is a fib that's already completed. We've reached the 161.8 level, and since then, just as with the Nikkei moving down to the downside, we not only broke this level, but we retested it as support, which set up the bonus round moving up to 200. Since then, pretty much since the middle of March, all the yen has really been doing is bouncing back and forth between these two Fibonacci levels, between 81.97 and 83.49. What I would expect to happen next would be for the yen to either break above 83.49 and retest that level as support. If that's the case, we'll trade the next bonus round up to 261.8, which is at 85.94. Or the yen might break out of the bottom at 81.97 and then come back up to test this level as resistance. If that's the case, most likely we will return back to the 0% fib, which is at 79.52. Until one or the other happens, I'll simply continue trading between these two levels on a smaller time frame. Till next time, this is Andre Knight.